Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Friday, July 29th. Well, the Bank of Japan disappointed the market by taking only minor action at its meeting this morning. It increased its purchases of exchange-traded funds and doubled the size of a dollar lending program. But it left its main programs, the negative interest rates and its target for the monetary base, unchanged. As I predicted, the yen strengthened as a result, as the majority of analysts had expected them to take more action and provide more stimulus. Now, the Bank of Japan admitted that there are risks to achieving its 2% inflation target within its target period. No surprise there, it hasn't hit 2% since 1992. And it ordered a comprehensive assessment of the impact of its easing program to be discussed at the next meeting on the 21st of September. I think the bank is coming to the end of what it can do with monetary policy. This fact may weigh on dollar-yen, pushing the pair down further. In other words, strengthening the yen. The dollar continued to weaken on further fallout from the FOMC meeting and yesterday's weak U.S. economic indicators. The June trade deficit widened and the Kansas City Fed Manufacturing Index turned negative. Those aren't major indicators, but I think in the absence of any other news from the U.S., they affected sentiment for the dollar. Oil prices fell further on news that Libya's biggest oil port started to reopen after the government, or what passes for a government there, settled a dispute with the guards. Libya's output has plunged from 1.6 million barrels a day before the civil war to only 320,000 barrels a day today. So there's plenty of room for them to increase output. The Canadian dollar and other commodity currencies weakened as a result. For this morning, there are several news items out about the EU, several data points about the EU that may prove market affecting for the euro. All of them come out at the same time, so it may be hard to untangle their impact on the FX market. EU unemployment is expected to be unchanged in June. That figure doesn't usually tends not to be market moving. EU CPI is expected to accelerate, which could be beneficial for the euro. I'd say though that the impact from that number won't be very much because EU-wide CPI tends to follow German CPI fairly closely, as you can see from the graph, and the euro was boosted yesterday by a higher than expected German CPI figure. That leaves EU second quarter GDP as the main European indicator this morning. The market expects growth to slow to 0.3% quarter-on-quarter from 0.6%, with the year-on-year rate declining to 1.5 from 1.7. That could prove slightly negative for the euro, although I expect that the impact would be limited due to the fact that so much has changed since the second quarter. Also, the market's been busy ratcheting down its expectations for this afternoon's U.S. second quarter GDP figure, and that may prove the more important statistic. But more on that later at my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.